there's a lot of really skilled people in oil and gas and in energy finance that could easily do this. They think that their current job is safer, right?
Right. Yeah.
And the truth is that, it might not be. Maybe the way that we're working or the way that we're pursuing things is the future, right?
Boom. Live, Schaper.
We're here.
We're here. Okay, we were kind of talking about this a little bit, but we've known each other now. What is this? 12 years almost, something like that. Maybe.
Yeah, 2013, right?
This is kind of nuts. And you said this, which I don't have any memory of, but supposedly you had a beautiful head of hair at that time.
Yeah, it was gorgeous. Now it's all gone thanks to investment banking, right?
You were but you were also a lot heavier at that time, and you wore the cowboy boots all the time, and
that's right. Yeah, quite a bit pudgier. That was the banker body, right?
The mid-con expert at that point on the A&D team.
Yeah, we've come a long way.
So you were so we'll go through a little bit of background, but right before you were at Citi, you were at Newfield. Is that right?
Yeah,
am I thinking about this right?
Newfield Exploration, when they were still called Newfield, and then Quantum Resources, which was the MLP private equity fund thing. Public MLP and private fund there in Houston.
Yep. And then let's walk through everything right before that.
Well, I mean, I was an engineer in industry, so I was a petroleum engineer, a reservoir engineer, and I did that for about 5 years, and then found my way into banking. Wound up at Citigroup and working in their A&D group in 2013 and 14. That's when we ran into each other.
Yep.
And then I left Citi and actually started a consulting firm back then. It was just me. There was nobody else involved.
What year was that?
It was 2014. So when I left. Citi was a brief stop. Wasn't there for very long. It was
a brief stop for me too.
Yeah. I think it was a brief stop for everybody, if we're being honest. With good reason. But yeah, so started the consulting company out of that. At that time, it was just me. And then I did that for about 9 months. I got kind of worn down. I was doing it by myself and decided to take a role with Bank of America and went into their A&D group and helped kind of grow that practice, A&D at B of A. And then I left in 2018. I left banking for good, I guess. Yeah. And reformed the consulting company and began growing that team. So now that's a 6-person team here in Houston.
Well, awesome. I remember us, you still covered a lot of Oklahoma E&P at your time at BAML, because I remember we got together a couple times when you were working with a couple of the guys that were much better financed than we were, but trying to see if there was a deal to sling as usual.
Yeah, I worked a lot in Oklahoma. I have clients in Tulsa and Oklahoma City, and did a bunch of technical work up there previously. So that's kind of how I was physically living in Tulsa for a while, and worked in the field. And I know, right? I worked in the field in McAllister and then out in Wheeler, Texas. So I was working on the rigs and doing all the things that you do as a rotational engineer. But yeah, I lived in Tulsa for about 3 years at the very beginning there, before I moved back to Houston.
Yeah. Okay, so then
to be honest, I didn't even know where Tulsa was when I got hired. So I had to look it up on a map. So.
And then what was the catalyst? Okay, we know the original catalyst, right, was probably some version of burnout. And then you made the hop back. What, walk through both of those.
You leaving Citi and then, so banking is kind of a high octane job, right? Yeah. You're working around a lot of type A personalities. You have client pressures and client deadlines, and the job just kind of, chews you up. There's a lot of folks I think that are really well suited to do it maybe for their whole career. And I know a lot of them now still, good friends of mine, people I've hired, trained, people I worked with, people I worked under. And, it's, I always kind of knew it probably wasn't something I was going to stick around in forever. Not that I had my eye on the exit from the beginning, but it just was for me, maybe not going to be a long-term fit. And I worked with some really great clients when I was at the bank. I also worked with some real dickheads. uh, so, they know who they are, right? So, like,
Sure.
I think you get a chance to see kind of the spread of people that you would want to work with in the future, and then the ones that maybe you don't want to.
Yeah.
And the difference between being at a bank and running your own firm is, to a certain extent, you do get to choose who your clients are, right?
Right.
So I don't think the move away from a bank was a bad one for me. I think it suits my personality. And also, in the bank, you're doing more sell side work. Now I do kind of more buy side stuff. And that also suits my personality a little bit better.
Yeah. So walk through the first 9 month endeavor. How did that, sort of start, and then, how did it end with you sort of going back into banking?
Yeah. So when I left City, I didn't have another job lined up. I just left.
Which is really rare, right? Like if I think through the cohort of, like, because I was like, I left in 2014 also, but like it was a function of, like, people got poached quite aggressively.
Yeah, there were folks that would, the analysts would of course leave to go to private equity.
Yeah.
The mid-level bankers were going to other banks, or they were going to corporate jobs or whatever. I didn't really, that really wasn't my track. So, like, when I left, I started kind of working with certain clients and help folks raise money. I helped folks do engineering work, and that kind of morphed into, like, the current engineering firm that I have
Yeah.
today. So it was kind of like out of necessity that I did it. And we talk a little bit more about this, but, like, what do you do when you leave a job and you don't have an income, right?
Yeah.
Like, it was a good job, now you don't have a good job. What do? You kind of create your own job, right?
Yeah.
And that's effectively what I did when I left City, is sort of create my own job. And then when I went back into B of A, it was like I quit my own job, for a while. And the market situation at that time was 2014. It was not good, right?
Yeah.
Like, it was early 2015. The market was real, real shitty. And I felt like being indoors was a good place to be at that time. And I think
Yeah.
I was sort of right. It would have been really challenging to sort of be what I call an outside cat during those years. But 2018 came around. I had kind of helped grow the team at B of A a little bit, and by then was leading their A&D team, and really was, I didn't think there was much more for me to do in banking. Certainly, I could have stayed and become a lot more accomplished and done a lot more deals, no
Sure.
doubt. Um, but I felt like, for my career arc, that was the exit point, and the place that I wanted to not be in banking anymore, and go do my own thing. There also, when you're in those roles, you can't really do much outside of it. You don't. Not only do you not
No,
have
100%. Yeah, that's
no,
110% of your life, right?
that's right. Yeah, and I had a lot of other interests too, right? So, um, investing in oil and gas, which we can talk about. You know,
Yeah,
all,
your interest unfortunately might have been a bad one, Schaper. It might have been better just to stay in banking so you were barred
maybe.
from
Yeah.
investing.
Well, and I think a lot of this is one thing that a lot of people maybe they don't really appreciate. They think, well, I'm going to leave my job and I'm going to go invest in something.
Yeah.
I'm going to invest in a company, or I'm going to invest in
Yeah.
assets, or whatever.
I'm going to
What they
start a baby family office that will compound into this
Right.
juggernaut that will retire me at some point.
Yeah. So I think the thing that's missed often, and now I know this because I messed it up at least twice. When you are leaving a job, you don't want to just have a use of funds, which is this investment that you're making, right?
Right.
And it doesn't produce any cash flow for some extended period of time, because all that's going to do is it's going to put you in a pressure cooker and make you want to go back to your old
Yeah.
job, right? And I think I've done this now twice, leaving and investing and thinking, oh, this is the thing I'm going to do, and it's going to be successful, and that's great. But what you find is you really need something you're doing day to day that's going to earn an income. It can
Yeah.
be trading your time for money. That's perfectly fine. I think a lot of people look down and say, "Oh, I wouldn't want to consult because I just don't even know what that is, and how would I market myself and this and that." But the truth is that if you're good at what you do and you have a certain set of skills, you can
Right.
market those skills. You
Right.
can make those known to the world, and once they figure out you're a free agent, guess what? You have a job, right? And the difference is that instead of having one job, you've got a job with dozens of clients, and they all need your help. So
Sure.
then it's up to you to figure out how to fulfill all those things. So I always encourage people, like, if they're going to leave a job, you're never unemployed. You're just self-employed,
Right.
right? And I don't think people have to kind of reframe their mind around that. But if you want to have some longevity around it, I think people think really discreetly. They're like, this is my job, and then I have to jump to the next job. I have to make sure I get my full compensation, what I was getting paid before.
Right.
You need to dispense with all that. What you need to do is you need to reduce your overhead down to nothing. Okay, cut your carrying costs, sell the boat. I sold the boat, right?
Which, like, it's crazy they had
All the
one
extra
in the first
houses.
place that you never used or
You
had an
can't,
opportunity.
unfortunately, you can't sell the expensive banker suits, right?
Yeah.
So those you just have to throw away.
Or
But
you hope you can fit in them for a long time.
right, which I didn't. So get rid of all that. Get rid of all that, and get rid of all the overhang on your life, and focus on what's going to make you happy and working with the people that you want to work with. And don't worry about the compensation, because the money will come if you're doing what you want to be doing and something that's valuable to people, right? In my case, the simple piece of it was providing engineering services, providing advisory services, doing expert witness testimony, and then it kind of just morphs into a bunch of other stuff, right? Um, so I have always been a big advocate of, like, create your own job, like, go out, do what you want to do, and if people are attracted to that and they like that, they will hire you to help them.
Yep.
And um, so I still, I've committed a bunch to that effort. We've hired, trained folks, and now we have a kind of our own internal system, and you start to build a bit of momentum with that. And that after building that for a few years has allowed me to start placing other bets, and in particular, real estate. I think we've talked about this a little bit,
Yep.
but in 2020, when there was nothing happening and everybody was hunkered down in their houses, uh, my partner and I went out and we found land, and we started a real estate development, storage development, and it was ground up development. We didn't know anything any
Sure.
better, right? Took a long time to get it off the ground, but once it's off the ground, it's kind of rolling and you're building some momentum, and a whole lot of brain damage behind that, right? Like, it takes just a lot of effort and time,
Yeah.
and there's a lot of bear traps and ways to mess up there, and but there was nothing else going on during 2020, so I took that opportunity to, like, better myself and figure out something to do that would allow, I could still do consulting and build a business in the background, but when the market shuts down, you have to figure out something else that's going to keep you busy.
Did you
So,
see a steep decline that year in terms of just work on the oil and gas side?
oh
Is that
yeah,
what freed
yeah,
up so much time for you to start, whether you call it a distraction or not, just at least pursue a different avenue?
yeah. So in 2020, it was kind of interesting because I had just started a doctoral program at Texas A&M
Okay.
in January of 2020. And I was thinking I was going to take a course at a time, and it was going to
Sure.
be an energy-based doctoral degree. And COVID created an opportunity to do a lot of it remotely
Yep.
and to speed it up also. So when that happened in March, in addition to doing some more real estate oriented stuff, including ground up development, I also accelerated going to school, which, spent more time on classes and other things. But from about April 2020 through November, there was almost nothing going on. Like,
That's
clients weren't
crazy.
ans- clients weren't answering the phones. I was paying payroll, right? Like, I was paying salaries, and so yeah, that's a little bit frightening.
Yeah.
And looking back on it, like, I probably would have done a couple things a little bit different, but
Yeah.
in general, you just kind of have to hunker down quickly.
Yeah.
And, when we came out of it, we came out hot,
Oh yeah.
right? Really hot. The market came back really, really kind of on fire at the end of the year. And uh, by then, we were very lean down. We
Yeah.
were ready to take advantage. We had built a bunch of processes and internal stuff. So the business was sort of ready to respond to that. We probably didn't have enough staff, honestly, when we
I
came
mean,
out
there
of
was
that.
an M&A frenzy at that end of that year, right? Of all, like,
Yeah,
if you can sort of trace back a lot of core acreage to big deals that got done in the fall and winter of 2020, which is like kind of nuts.
there's a, but yeah, it kind of goes in ebbs and flows, and I think a lot of folks too. The mistake I made when I left City and went, I had that 9 or 10 month break, is I didn't hire anybody. I was just doing the
Yeah.
work myself, right? And when I came out of B of A, I guess a light went off, and I said, look, you can't really build a business that's very big or scale. And
Yeah.
my goal was never scale. It was getting back some of my time to be able to reinvest in some of these other
Yeah.
things that I wanted to be focused on. And um, you just can't do that if you're solo
Yeah.
entrepreneur guy, right?
And you were kind of more in a management seat at the tail end of at B of A versus, let's say, at City, where you were more of a, call it, individual contributor. Like, yeah, sure, you had to work with some other folks or whatever on the A&D process, but you weren't running the team.
Right.
Whereas, so I suspect you just got used to that skill, and that became your base.
Yeah, I mean, I think I shared this with you before, but like, I'm probably not the most natural manager person.
Yeah.
Like, I'm not like the guy who was like, "Hey, I want to run some giant team." But at a certain level, you have to figure it out. You
Yeah.
have to figure out hiring and retention and compensation, and you have to figure that stuff out because if you don't, you're not gonna be able to attract people to your company and keep them there and keep them happy
Yeah.
and make it a good work environment for them, manage them appropriately, and have them help train folks. Like there's all these things that you have to figure out if you want to be sort of independent and if you want to have a modest amount of scale. I'm not talking like build a giant company, but if you want to
Yeah,
be
you're
more
trying
than
to build like a mighty business, right? And the mighty business probably still requires a bunch of like sort of rock stars around you. But you're not empire building. Yeah, I think that's quite
like
apparent.
I think a lot of people think, I'm going to leave my job and I might never make a dollar again, or I might not find the same job. Trust me, it's not really that difficult to actually replace your income.
Right.
Like that piece is not really that difficult. And I would argue, coming out of banking, you can replace your after tax income pretty easily. It's the question is like, how do you get to the next level that allows you to make investments and do other things and
Yeah.
give you a little bit more flexibility? And, um, you know, there's really like using for in the case of a business, different points of leverage, right? So there's labor leverage, there's capital leverage, to borrow a few concepts. And
Naval Ravikant
there you go.
concepts there.
Yeah,
Yeah. Yeah. Yeah.
great materials, right?
Yeah.
So I use some of that myself, but like, I think you have to get yourself into a position where you've got some sort of
Sure.
stable. I say stable, like stable income could be up and down revenue
Right.
50-60% a month, right?
Yeah.
But when you're outside and
Yeah.
you're not,
Some cash flow base that is, gonna figure out your business going forward, unless you're playing a very different game. But this game
yeah,
you're talking about, you need some cash flow base.
I've never really been kind of the sort of scale for scale's sake
Yeah.
person. I just that's just not really. There's guys out there that want to do that. They want to go raise a bunch of money and run a big team. That's not really kind of what I'm after. Um, I like having more significant impact, like on a
Yeah.
particular thing that I'm working on, right? So it could be a real estate development. It could be any of the oil and gas investment stuff, which we talked about. Like I used to do that pretty widely. I was investing in minerals and the non-op stuff. Like I've done that for a decade now.
Yeah.
Um, and I don't looking back, like it was good at the time, it made sense, but today, like it doesn't really compete, and I don't really.
That's a prime example of if you want to play that game, you do need the capital leverage.
Yeah, I mean, I go. A lot of people think, well, I'm going to leave and I'm going to go bootstrap this little oil and gas company. And I talked about this a little bit on LinkedIn, where I said, look, the thing that people don't understand about oil and gas is it is an equity leverage game.
Yeah.
You must have equity leverage, meaning you need to have carried economics on equity and in a pretty outsized proportion to the asset in order to
Yeah.
get the outcome that you want.
Right.
Because it's a commodity based business, it's got a ton of volatility. Your outcome is the result of like a seven input and statement,
Yeah.
right? It's pricing and operational success
Yep.
and capital flows and all these other
100%.
things that go into it. It's like you have to have an open capital market. So I think that, a lot of people look at their success or a group success in oil and gas and say, oh, it's just, it was all talent. I'm like, well, yeah, and all these other things have to go right at the same time. So there are incredibly talented teams out there. I think that they're more rare, frankly,
Yeah.
oil and gas, but they're out there, right? There are some really quality teams and guys that know what they're doing. Um, but a lot of the success that you see also comes from flows, right? People coming
Yeah.
into the business. There was, of course, the big run up in shale acreage that everybody saw, and people. There are just transactions that come out of that, right? And so um, I found, this is just from my part, that I wanted a more deterministic way to make money
Yeah.
that was not so based on the ebbs and flows of the market, which, to be fair, I deviated off into real estate. Certainly, that also has a capital flows, and you see the same sort of
100%.
gyrations in it. But what I found is you can actually operate at sub institutional scale in real estate on your own if you want to. You can buy rentals. I've done
Yeah.
student rentals. I've done short-term rentals. I've developed boat and RV storage. I've developed light industrial. So
There's
like,
also a ton of leverage. You can you put a lot of debt on those things. I mean,
yeah,
your point I think is right on like the equity capital piece on an oil and gas company, like the concept of trying to go bootstrap. I think, for a long time I thought that okay, you could do it. Like you could generate alpha, like just being scrappy or smarter or whatever, and like you
right,
sort of try to operate outside the system. I think there's an extreme power law to two things, which is the opportunity set of deals you get, and that requires capital
yeah,
because if you want to see great deals, you need capital. But not only that, you probably need capital from the right folks. So you need sort of branded equity, and that comes in. The second is the funds that have historically made money are the funds that continue to make money. Like I think it's like almost clear as day now to me, which like I didn't think this way, call it 10 years ago or whatever. Today I like, if you're going to play that game, it's like, no, I want a big bag of money from a sponsor that knows how to make money. Because I think I get the double whammy, which is I'm going to see a surface area of deals that no
yep,
one else is going to see or anyone else of my caliber isn't going to see. Yeah, the hustle is obviously critical in terms of, you're going to pound the pavement on seeing stuff. Okay, that's like sort of endogenous to trying to win that game. But the sponsor effect, I think, just gives you a huge leg up. And then the second is like these guys know how to make money. And yeah, okay, there's a power law within those funds where certain management teams will generate a return and then some won't. But if you want to be one of those, like I still think you have to be in that bucket. Otherwise, like, just forget about winning.
well, it's gotten a lot tougher over the last 6, 7, 8 years to form a new team and go
Yeah,
get new funding, right? Because the the number of people that are being funded under that model has dramatically fallen.
sure.
It's much lower today than it was 10 years ago, which means that, and this is not to discourage people from trying, but I think that they have to understand it's a numbers game. And if that sponsor doesn't know you,
Yeah,
if you're not in their country club or whatever, not saying you have to have a special relationship, but like I've seen, uh, if you go in there cold, you're toast. I mean,
Yeah,
I just think
I
a
think
lot of
that's
people
right.
think, hey, I've got this brilliant idea. I'm going to go drill this such and such in this area, and it's a nonconformist idea. Yes, you're right. That's how you would, in theory, make an alpha outcome. But guess what? You're raising money from people who
Yeah.
effectively are sheep. They came out of investment banking. They are not risk takers. They are people where if they take a risk like that, they get their head chopped off if they lose a bunch of money in an investment.
It's
So
very
that's
different than
different to
venture,
say,
like a venture model where you get approached with a deal, and you can afford goose eggs. You can afford to whiff. You can afford to be wrong because you have a basket of deals that are going to sort of offset that.
there is
My
no capital provider in oil and gas that is a
No,
venture style capital provider, and nobody wants to take that risk. This
their
is why,
LPs don't want them to take that risk, right? So, like, my suspicion is if you went to these funds and said, "Okay, great, take a look at your portfolio. What percentage of the portfolio have you known one of the primary management team members for at least 5 years?" And I
yeah,
suspect the answer is like really high. Then you say 10 years, and then you say 15 years. And before you know it, you're like, oh, you have known the pool of people that you want to work with since the early part of your career. You
probably
may have
since
not
you were
worked with them for 15 years, but you
probably
have
since you were in
known them
college.
for 15 years.
Yeah, and this isn't to say that if you don't have those relationships that you can't get funded,
Sure.
but you got to understand who you're up against,
Yeah.
right? You're up against people who were in their fraternity in college.
Yeah.
You're up against people who were working with them at their last job,
Right.
right? You're up against their boys from investment banking,
Yeah.
right? So this isn't to
We'd
say
like
that,
to be the boys from investment banking, just to be quite clear, Shopper.
yeah,
Happy to be the investment banking boy.
sure, right, whatever. But like at some point when you're out there, and trust me, I have had, and I think I don't know if I shared this earlier, but I have had an unsuccessful pursuit of
Yeah.
private equity capital in the middle market, right?
Yeah.
And what it taught me was the best teams, the most skilled teams, and this is not to say I was on one
Yeah.
of those, don't always get funded.
Yeah.
They don't always have their ideas adopted by capital.
Yeah.
So you could talk to 80 of them if you want to, and I have. But just because you have a good idea, this isn't venture. This
No.
isn't somebody is going to take a bet on you. This is people that want to deploy money at scale and earn
Yeah.
fees. Scale and fees. That's what drives all of this, right? So do you, as the person coming to them, have a deal that you've locked up somehow? Do you
Yeah.
have exclusivity? You probably do because you don't have capital.
Right.
But do you have some relationship that's going to create deal flow? Yes, maybe.
Right.
Uh, that's what they're looking for. They want to be able to reliably deploy money and earn fees. Very simple.
It's an extension of asset management, right? And so, like, if you sort of think through that incentive structure, can you speak that same language, right? Which is you sort of need this Venn diagram of, well, you're scrappy and entrepreneurial and in ability to hustle up deal flow, but you also need the other element of that Venn diagram, which is the ability to speak asset management, which is ultimately the business you're in. You're an extension of asset management, and if you
Well,
can't speak
that's
that language, it's going to be really tough.
another key differentiator between going out on your own and starting your own business in some unrelated industry and working in oil and gas and raising private equity
Yeah.
capital. You do not control your own business.
No, 100% not. Yeah, yeah.
You are a manager of assets and you are trying to generate outsized returns by whether developing those assets or optimizing those assets, but really kind of catching capital flows into those assets, really.
Right.
That's where the alpha comes. So in those instances, I think that, you know, you have to realize your place in all
Sure.
this, which is you're going to get a carried piece of a profit interest in the case that you meet all these conditions. And if you don't, over the course of 3 to 5 years and beyond, if you stretch that life of that investment, you
Yeah.
quickly become disjointed with the sponsor.
Right.
And you're managing their asset for their fees, and you are earning a salary, and there's not much left, right?
Right.
So people, I I have dozens of friends in the space that are managing assets. They are, maybe no shot at carries. Maybe they're going to get a carry someday. That's
Yeah.
great. But like, that's the game you have to understand that you're playing. It's like asset manager with a call option,
Right.
right? Not I'm running a business and I get to say and do whatever I want.
Yeah.
No, you're going to be editing PowerPoints for somebody on a Sunday.
That's right.
You're going to
Now,
be
I think there is a
preparing
distinction
for a
though,
board
right?
meeting, right? Yeah,
Which is, I think there is, if you took most really intelligent people and you said, okay, great, like the present value of working at a XYZ company in a middle management role will ultimately over time be your best case at achieving some financial freedom or whatever, and like the number of hours worked and like the stress and all this, like I still think you have a lot of those personalities where they're just not going to do that. Like they are wired to take at least 1 degree greater risk. Like I don't think the concept of taking risk is a very binary concept. I think it's a curve. And I think like if you think about people on that risk spectrum, the private equity backed structure is riskier than taking a larger corporate job to most people. Like that would be their perception of risk. I don't really,
I
to
mean,
you and
I
I,
think
it probably seems like the equivalent amount of risk. So I don't really, whatever. But like,
the risk is going to be the opportunity cost,
right.
right?
Yeah.
What could you be doing with that time that you were otherwise spending to manage someone's assets?
Right.
And I think there is a real opportunity cost. I think a lot of people just look at it and they say, "Oh, this is the carrot that I'm here to
Yeah.
chase," and this is my carrot, and the carrot allows them to like rationalize all this different other behavior that
That's
they
right.
do. So the same could be said, I guess, for banking. It's just shorter term. It's
Sure.
like every year, right? You have a carrot. That's great. Um, but when you leave and you start your own business, you really have to reframe all of that. Like
Yeah.
you're not working for short-term gains. You're working to make sure that you can reliably do this every day for years and decades. Like that's it.
Yeah.
And you got to set your life up to where you can capably accomplish that. Um, and there's a lot of really skilled people in oil and gas and in energy finance that could easily do this. They think that their current job is safer, right?
Right. Yeah.
And the truth is that it might not be. Maybe the way that we're working or the way that we're pursuing things is the future, right? It's using your knowledge and your skill set, your expertise, personal brand, whatever, uh, in trying to pursue uh, self sufficiency, self employment.
Yeah. I mean, look, I think most people are of the opinion that you and I take an extreme amount of risk and that they would never take that amount of risk. And I'm speaking a little bit on your behalf, but here's my perception, at least on my end, which is I don't think we think we're actually taking that much risk because what we're doing all day, every day is mitigating risk.
Yeah,
Like I'm spending all day, every day towards some objective function and figuring out backwards what can I eliminate from a risk perspective to achieve that outcome. Like that's like sort of all I spend time thinking about doing all day, every day. And I happen to have a lot of those things that are within my control. Obviously, there's a lot that's out of my control, but I spend as much time as humanly possible thinking about what's in my control. And I have a firm belief that if I mitigate those risks, good things ought to happen, or at least some version of the objective I'm trying to accomplish will happen. And I think most people don't really see that. I think they see it as like, those guys are crazy. Those guys
yeah,
are taking an insane amount of risk.
well, and to be fair, like starting your own consulting business or working for yourself, that piece not very risky.
Right.
Like you can do that. You can trade time for money. You're not going to go broke. Like I tell people this all the time. I'm like, you can go work for somebody hourly. You may make less money, but you're not going to go to the poorhouse, right?
Yeah.
Now, if you're out there also doing real estate development where you're personally guaranteeing loans, which I do,
Yeah.
uh, so yes, that is a little bit more risky, and you're adopting a higher risk profile in pursuit of a higher return. Um, in real estate, I enjoy doing it more than I do in oil and gas because I can get more scale, I get more leverage, I can. There are more inefficiencies to take advantage
Yeah,
of. Right? Like in oil and gas, it's really hard to like you can have an edge and it gets competed away, right?
100%. Yeah,
Whereas in real estate, you can be you can be a very average intelligence, and thankfully for me, like, you know, and pursue something if you try hard and you just
right.
keep trying hard for years, something will come out of it, right?
It's kind
You
of
just have to,
counterintuitive where the barrier to entry is actually lower, but your expected return is probably higher.
it could be. Yeah, I mean, I think if you are out there just buying existing buildings and hoping to improve them or whatever, then that can be a challenging. I
Yeah,
see other people do that and they are using investor capital, right? They're raising
yeah.
investor capital. Our model is self-funded. It is not, we're not raising money from anybody, at least not today. And, you know, we don't really have a strong desire to have like a bunch of other people telling us what to do, right?
Right.
We already have a lender, right?
Yeah.
They don't really get in our hair, but like, I guess the point is,
You don't want to have to talk to someone every day about everything you're going to do.
no, and I don't want to ask permission either,
Yeah.
right? Like I want full autonomy of everything I'm doing. And if I choose not to work with a group or a client or a lender or whoever, I can make that choice, right?
Right.
Um, and you're going to give up some things with that. I think, and I know that I've given some things up. This is like a self-limiting perspective, right?
It
If
is
I,
and it isn't, right? Because you're consciously, it's like this high agency concept of saying, well, this is worth more to me than the expected outcome of going the other direction, right? Which
I
is
mean,
you
we
could
go raise
probably
money.
make more by allowing some, taking other people's capital and losing some of that control. But that control is worth so much to you. In other ways, like if you had that much money that you made, you'd probably buy it back so you can have that control anyway, right?
I think everybody there's an art to this, right? And if I had started younger, like if I had started as a 25-year-old and had no capital, and I said, look, I just have to raise the money to get this
Right.
deal done. Yes, that makes perfect sense, right? But if I start as a 35 or 40-year-old, well, okay, I'm exiting. I should be a little bit more well established,
Sure.
and I get to choose whether I go out and raise money and then have to answer to a bunch of new people, right?
Yep.
So this is the same thing if you were to take. It's a little different if you're doing a retail raise from folks who would be investing in oil and gas. Maybe they don't have the control over you that a private equity sponsor would, right? But
But you're also
fundamentally,
playing that game on hard mode, right? Which is like, you know, now you're somewhere in the middle, right? Which is like, well, I didn't want to be just me. I didn't want to take institutional capital. So now we're going to do this like, raise money from accredited investors and dentists and convince them to invest in like oil and gas wells. It's like, dude, that is
honestly,
a game on hard mode.
it is, and I have experience with this too. Like we've done deals where we've raised money from folks that partner with us on non-operated oil and gas assets. They're great partners, some of them friends and family, but you can't scale that way, and you're going to end up just wasting a bunch of time and energy and your own capital. And I mean, I think if you're doing it in real estate, yeah, maybe you can scale that. And I know people
Yeah.
that have very successfully, right? They've raised retail capital, they've returned capital to their investors. The other thing that people don't really think about is you have a fiduciary obligation to somebody when you raise their money,
Right.
right? You have to report to them, you need to be responsive to them. And I take that very seriously. I don't mess around. Like if I raise somebody's money, I'm going to be reporting to them every quarter. I'm going to be answering their emails all the time, and I'm going to feel obligated to do that. So, do I feel good about having that obligation? Maybe I don't want to do that today, right?
No. Yeah.
Um, I know myself, and I know that I would have to do that if I raise that capital. So, um, it's not necessarily a laziness. It's just you have one more person to answer to,
Well,
right?
you have designed a structure that works for you, right?
Yeah.
Because you have a pretty good recognition of what do you want your day to look like, and you've structured your business and your involvement around that. So, okay, on the commercial real estate front, what are the odds that you would have gotten involved in any of this had you not been on Twitter?
So Twitter kind of was an outgrowth of what I was already doing in real estate. So I got more active when we
Okay.
started developing the site. Twitter didn't really, it didn't create an opportunity, an initial opportunity for me in development. We started on our own, but I started sharing what we were doing on Twitter, and that
I
actually
see.
changed a lot of things. It created a lot of learnings for me. For one, I would put out things that we were doing. Hey, we're doing this site diligence, or we're looking at this thing, or we're building a building a certain way, right? And I would get feedback. This is back
Yeah.
when Twitter was a little bit more functional, I guess. Now it's not so much, but um, putting things out and then getting feedback from the community and
Yep.
iterating on our own ideas. That was part of it. Another part was just networking, like putting ideas out there and seeing what people thought. Sometimes people come into the DMs and they'd be like, "Hey, this is interesting. I'm working on this other adjacent space. Like you're doing canopy boat and RV storage. I'm doing industrial outdoor storage.
Yeah.
Let's get together and talk about that, right?" So it created some just peer relationships. I was new to commercial real estate. I had never done anything with it before, aside from these I did short term rentals, which was another whole just god awful. Like don't do that. Um, yeah, I did student rentals. So I was involved in a couple other types of like residential real estate that I quickly dispensed with. So I
Yeah.
got in and got out
That
and
sounds like a nightmare. Like
yeah, I'll
it,
never own anything that somebody lives in again. Like I know people that do this and that's their business model, but you know, we're having a hard enough time keeping people from living in storage units, let alone try to live in a short-term rental. Uh, so yeah, I think also it's like okay, I'm going to build a house, or okay, I'm going to buy a house and rent
yeah.
it. Am I really getting scale from that, or am I going to have to go through brain damage to get financed every
Yeah.
single?
Yeah.
And the answer is you're going to have to go through the brain damage, and then you can't scale because guess what? Every house is different. Every house needs its own. You need enough scale so that you can have handymen,
Right.
right? And otherwise you're paying out the nose to like send somebody out there every time something breaks, or you're going to try to do it yourself, which is also equally stupid. So anyway, just don't do stuff that doesn't scale at that level, right? Of
Yeah.
real estate. You can trap yourself into thinking that you've built a business where it's actually just a low gross margin business that a
Right.
single broken pipe or ice storm can screw up, right?
Yeah.
You really need to be able to have leverage at the asset level and have it be a big enough investment where it's meaningful enough to you. And for us, we also still wanted to keep control of it too.
Right.
So that's
So,
yeah,
so let's talk bigger real estate development that you've been spending some time on now, which
yeah,
is related to data center, which is like, we talked a little bit about, power gen demand from AI for new data center development. And, I think you posted quite a bit of stuff on this subject on LinkedIn. How are you getting involved? What are you seeing is interesting? How'd you start looking at some of this?
yeah. I've been working on power projects since probably 2021, around the time when the winter storm
Yeah.
Uri came around, and I posted a little bit about this. Like my background originally was electrical engineering, and so I
Yeah.
had studied power in school. I just hadn't done a lot practicing with it, and um, started working on some projects after that 2021 event and did some expert witness stuff and started working on power system reliability modeling. And from that, I like kind of went deep into what the transmission network in Texas like really looked like and how it was set up. And that was more like a curiosity for me. It
Yeah.
was I didn't really have like a business initiative or some
Sure.
sort of motive that I was really focused on, but um, it was an interest. So I dug in, and about a year and a half or two ago, I joined up with somebody that I actually met on Twitter, and we started working on a project where we were doing site selection and pre-development and development for data centers. And we focused really on just some of the largest data center sites in Texas.
Yeah.
And so we've got, we're working on 10 or 12 different projects throughout the state right now. Um, the main focus is, can you find sites that can get power secured to
Yeah.
them and have all the other features of the site be the correct features for a data center development.
Yep.
But it's challenging, and like it's a real interesting mixture of skill sets, right? Like the real estate as well as
Yeah.
power engineering and even oil and gas in a certain sense. Because now there's this discussion about natural gas as a generation source and
Sure.
potentially behind the meter natural gas. For a few reasons, I don't know how pervasive behind the meter gas generation is going to be. I think that you can kind of break it into a couple different components. There's a ton of inbound demand to midstream guys right now
Yep.
to get them gas to their site, right? But I have found through my interactions with different co-location developers and public REITs and tenants, they don't know much about natural gas.
Yeah.
I'm not sure that they want to know much about natural gas. Like they're interested, but their interest is very like kind of skin deep, and it's like, okay, we know that this fuel can be used to generate power, but we have no concept of exactly how that would happen.
Yep.
Uh, there are a couple JVs that have been announced publicly about, hey, GE Vernova and
Yep.
Black people, right? So they're all now kind of saying, well, we're going to get in the game and we're going to, go buy some turbines and we're going to put them out on a data, site. And
Sure.
I think what you're going to run into is the people who are most interested in this are going to be the ones that want to deploy data centers faster. They don't
Right.
want to wait for 6 years or 5 years to get an interconnection. So if you're doing it faster, that means you're going to be doing it off grid. If you're doing it
Yep.
off grid, then it has to have high reliability. If it has to have high reliability, then now you're talking about redundancy.
Yep.
And I don't think people are really thinking that through very well. Um, maybe if they're in an area where they're comfortable running their backup gen sets like longer, then you
Yep.
can. If you're in a city, you can forget about it, right? You have too many emissions controls that are going to keep you from doing that. So I guess all to say, like my view of that is there will be certain situations where it makes sense to build permanent power plants to support data centers.
Right.
There's a lot of discussion about bridge generation for like, hey, just deliver me power for 2 years. And that business model just doesn't hunt, right? Like you're gonna have to spend a fortune or
Yeah.
get yourself
This
into
stuff's
a
been
very long
underwritten.
contract. Yeah,
Yeah. Historically to 20 or 30-year type deals or 15-year, like at a minimum.
you're not going to
Yeah.
be able to amortize the equipment over what would be the need for a bridge solution. So 5 years would be the shortest that
Yeah.
anybody's going to do, and even that is like, okay, well maybe that's even too long. And so I think those solutions are just going to be really expensive. We are focused on a couple. We have a couple sites where we basically are looking at building our own plant, and what would that look like? And
Yeah.
how would it be constructed? It's not going to be some giant turbine, right? That's not because if you buy one and it goes down, you have to have a second one,
Yeah.
right? And so I don't think people are really thinking through that piece of it, or maybe they are. I don't know, but
And are you thinking like a portfolio like here? Like is your view that like, hey, we're putting together 12 sort of options or 10 options and one or two are gonna be the lion's share of value potentially, or do you think it's gonna be evenly distributed in terms of the value?
so of the let's call it 10
Yeah.
sites that we're working on right now, all of them have an opportunity for a good outcome,
Okay.
right? They're all, we wouldn't be chasing them or spending our
Yeah.
own money on them if we didn't think that they had the potential. Realistically, there will be a couple that don't work at
Yeah.
least, right? And it might be three or four or five. I don't really know.
Yeah.
Um, you know, our hope is through what we're working on that we have spent the time and resources, and I've spent thousands of hours on this over the last few years. Like the sites that we're working on and have selected are in the best areas that can get served the fastest
Right.
and are the most buildable and have the most water and all the fiber and everything and all the other site considerations that are needed for these big
Yeah.
data centers. Um, like we've obsessed over it, right?
Yeah.
I don't know if there's anybody that spent more time on this than I have. Probably there are some folks who were in the solar business
Yep.
before or maybe they were in the Bitcoin business and they have a sense for what they're focused on, and maybe that's what they're spending their days chasing. I don't really know. Um, there are certainly people that are competing with us,
Yeah.
uh, both in the land and real estate side of things as well as power. Um, it's gotten to be, greenfield development of data centers has gotten to be extremely competitive, especially in Texas. Um, Folks want to be here. They want to
Yeah.
build here. They can do it faster than they can other places. Um, we have restriction light building regulations, and we have, pretty light touch air restrictions and
Yeah.
permitting also. So I know why people want to be here. I just don't know that we actually have enough power physically to
Yeah.
supply all the demand.
Well, it's also limited downside. Like if you say, okay, great, like our base case is we want to build for power intensive data center. Okay, great. Like maybe that works, maybe it doesn't. Like we've given ourselves a good opportunity for that to work. But let's say it doesn't work out that way, or like the demand sort of reduces for those sites, or whatever the case is. You're buying land in Texas that is on a long enough time horizon connected to the grid that could be, sort of you could put some industrial side on. Like,
Yeah.
what are the odds that you will lose money on that investment? It's probably, on a long enough time horizon, I think almost zero.
Yeah, there's not every site that we're working on would be a repositioning to industrial
Yeah.
opportunity. Probably three of them are realistically because they're in population dense
Yeah.
areas that are growing that would have already been industrial if it wasn't a data center. Um, so yes, there is repositioning potential for those sites. If it doesn't work for data centers, uh, I suspect that we would have a hard time really, really repositioning them because we've spent a lot of effort to make sure
Yeah.
that we get power to them. So that outcome would not be as good, I don't think. But is it possible? Yes, it is possible. And for the sites that are further afield, we have sites that are further out into central Texas that
Yeah.
in areas that really nobody is looking at or focused on or doing anything with right now. Um, the hope there is that there are sites that folks want to use for broad-based HPC and inferencing that are in areas with low power costs and no congestion and
Yeah.
light building regulation. And so there's a play there that's sort of separate from what I would call like metro data center sites.
Yeah.
The metro sites are more like cloud and edge computing and maybe some AI application. But the stuff in Central and West Texas is more like, all right, can we get it online quickly? Is it low power costs? Is it something where we have some advantage, right? Either we're using a certain utility that works well with us, or it's a site that's easy to acquire for whatever reason. So it's kind of it is a portfolio, like you mentioned. It's like 10 sites, and we like them all for different reasons. And if we didn't, I think we would just kind of drop that out and keep going. Um, but this strategy does have a natural endpoint, right?
Yeah.
It'll play out somehow. Um, if the demand materializes, then that strategy works. If it doesn't, then it doesn't work, right?
And it generally has sounded like from the last time we caught up, you are incredibly bullish on AI.
Yeah, I mean, I think we talked about this a little bit in terms of the adoption curve and the
Yeah,
fact that just a lot of people don't use AI tools yet.
for sure.
You and I might, and we're all using Chat GPT and we're coding with stuff. And, like, yes, those tools are, um, I'm bullish on its potential. And the question really is, in my mind, how much of this is going to be like generative AI need and how much is going to be inference? And where is the inference demand going to drive sites, right? So I'm thinking about it from a real estate perspective. Like, if all I wanted was really cheap available power, I probably would go to West Texas, or I would try, right? If, on the other hand, I felt like the demand curve was really going to ramp and the applications that were
Yeah.
using AI were going to start really needing more inference service, then I would look to sites that could probably otherwise be cloud sites because there's growth in cloud also.
Yep.
So there's a part of our strategy that really focuses on that too, which is the pivot from Gen AI to inference. And I mean, at least the way that I think about it, Gen AI is one of those things where you could have a bunch of sites that were set up for it, and then all of a sudden they decide they don't need those,
Yep.
right? And so you might get some whipsawing going on in the markets in those
I think
areas.
you almost certainly will, right? So I've been having a bunch of conversations, and one of the bigger bottlenecks that people talk about is like, okay, great. Like we as folks on the oil and gas side, I think consistently think about, oh, this is this much nat gas, which, to be quite candid, is not very much gas for like let's say 100 megawatt or 200 megawatt power plant. Okay, then you think about the power plant costs, and you're like, oh, okay, like even in this inflated world where it's a lot more expensive, it's whatever it is. And then you start sitting back and you're like, okay, what's the shell of the data center going to cost you? And you're like, oh, okay, that's kind of material also. But all of it pales in comparison to the GPUs or the TPUs that you're going to put inside. Like
Yeah.
it all looks tiny on an annualized basis or on the upfront capex basis.
The
And
thing people are paying attention to is the OpEx, right? Which is the
yeah,
actual the power cost is something that they are
yeah,
sensitive to. The problem is that, you know, as we've been looking at it, okay, yes, turbine lead times are really long, but we're
yeah,
not focused on turbines. We're
yeah,
focused on reciprocating engines. Okay. All
right,
right. Where can we get those? What do those cost?
yeah,
So, like digging in and figuring out, okay, what would be the lowest possible delivered power cost that we could put on a
right,
15 or 20-year contract, right?
yeah,
So, in my mind, if I get to a solution that says, you know what, I've got a power purchase agreement for 15 years at, I'm going to make a number up, but $60 a megawatt hour.
yeah,
Will somebody actually sign that agreement? Because in my mind, they're in their head, they're thinking, I might be able to get $50 a megawatt hour on the grid if I just
right,
wait
yeah.
2 years, right? So they're doing that math in their head and they're thinking, should I just wait? Should I get on grid and it'll be higher reliability and I won't have to build all this other
Should I do a
stuff?
short-term deal
Yeah,
and then go the other direction, right? Like,
yeah,
I think, yeah, that's a consideration. I think one consideration, which I'm not sure everyone has really thought about, which is if you sort of back into the calcs on what the demand is, and this new view on how much gas and how much new power, you're like, okay, great, like that's going to be $1 trillion of like GPU capex,
yeah. It doesn't
and
make any sense.
I'm not sure how you finance that, right? Like if you gave me a pathway where that was a financeable category, like real estate is, you
yeah,
could say, okay, then that means if we have $1 trillion in capex, we need 20% down for that. Okay, the big boys need to show up with $200 billion. The big tech companies can show up with $200 billion of equity. Like that is between public and private equity, you could do that. The problem is you can't finance it 80% because what are you financing? You're financing technology that will inherently be obsolete in 3 years. And then you
yeah,
say, okay, great. Like, let's say I can get comfortable with the obsolescence here. Where is the revenue to back up the capex, right? Like, it's not like it's we're drilling oil wells and producing hydrocarbon, and we are giving away the hydrocarbon. Is more or less the way to think about it, right? Like, which is generative AI as a category has not driven the revenue number in any material sense relative to the capex yet. The
yeah.
viewpoint is that will, but like it hasn't yet, right? So no one is going to finance that. It's like trying to finance the Bitcoin mining stuff, right? Because if it goes the other direction, right, where the equipment is not valuable, then it's not valuable for everybody, right? So it just like sort of there is no salvage value for this
Yeah.
stuff.
Well, you also have the backdrop of, all right, now I'm going to build a power plant, right?
Yeah,
All right, who's going to build the power plant, right? What sponsor is going to speculatively build a power plant? Well, none of them. So they want to see the user.
right,
The user wants to see, okay, I want to come to a site that already has a power plant.
right.
Okay, how do you square that? Right? So you end up with this like trilateral negotiation between somebody that has site control and is the developer, somebody with the turbines, right, the Genco, and then your user.
Yep,
What you really need, and I think what we're working on doing now, is providing true deals that actually have a see-through PPA. that's
Yeah.
provided through us, right? So let's organize the sponsor and the Genco, and let's provide that power contract through the land. You buy the land, you get the power contract, you build a power plant with that group. They're bound to it because they're under contract with us, right? So there's a way to do that, but it's tricky because you have to have a sponsor that trusts you as the land developer. They have to trust that you can bring the user to bear also. And the users are kind of interesting. So there's co-location developers, there's big public REITs, there are the tenants, right?
Yep.
The Microsofts and the Googles of the world. If you talk to somebody at Amazon or Meta or wherever, uh, you talk to one person one day, they say, yes, we're super interested in gas generation. The next person you talk to, yeah, I don't know, we're not really like on board with that yet.
Yep.
Talk to a third person, no, we're looking into this, right? So
Yeah.
you're going to get a different answer from every single person you talk to. I'm not seeing the alignment behind the scenes on the users, right? They don't,
No. There
they're
isn't.
not aligned on it. So now you go upstream and you say, okay, well, or maybe downstream, I'm going to go to the build to suit developers. What are they doing? Well, they're not comfortable with gas yet either because they don't know about the reliability. So just in time fuel. So I guess where I'm going with all this, Raj, is I'm not convinced that all the requests that have been made to the Atmoses and the Energy Transfers and the Kinders and so forth are real, right?
No, absolutely not.
And I think they're definitely 100% overstated, without a doubt.
Yeah.
And the question then is, well, actually, what are real, right? And this
Yeah.
goes back to like, there's a condition right now that is creating an over request of power, right? So there's
Right.
too many power requests. The same dynamic is driving an over request of natural gas.
Right.
So the capital will find its way to the sites that are the best for this use,
Right.
right? But there will be a long tail of sites that are left without a marriage to a capital
100%. Yeah,
provider. Right?
100%.
So I think that there are a lot of very opportunistic real estate developers that are in this space. There are brokers in this space. There are solar developers. There are Bitcoin people. There
Yeah.
are industrial developers. I mean, the list goes on and on, right? But how many of them are good at what they do?
Yeah, probably low. I mean, this is an opportunity driven market. For the life of me, I didn't. Yeah, because I spent a lot of time thinking through, okay, how can you be matchmaker and do the marriage and all these sorts of things? And quite frankly, a lot of banks are spending a lot of their time and energy on some of this stuff too. I think you're going to run into that financing problem ultimately, and all the value really comes from like 10 guys who could sort of make a big commitment, and a lot of them have shot their shot in terms of at least the near term, commitments. And
They're going to prefer these big JVs, right? Like these big
yeah,
splashy, hey, I'm doing 4.5 gigawatts of whatever.
and maybe they do, or maybe they don't, right? Like you've just decided who you're going to work with on it in the event that you ever do it.
Right. Yeah, it's not really any kind of binding commitment on any of these things.
No.
So I think, like, I do think that the users feel more comfortable if the equipment provider, the transmission provider, the hedge fund, or whoever, all just stack hands and say, hey, you know what, we're looking at this together.
Yeah,
and
that's right.
Fine.
Maybe that'll accelerate the timeline and reduce misalignment. And as you know very well, historically, there's just a lot of fat in the system, right? Because everyone's flipping to each other in the middle. And in this case, you can sort of RFP everything out and then have equity alignment. Yeah, agree with that completely. I wonder why, if like the general thesis is power is going to be in higher demand. So, the view here is power is going to be more expensive in 5 years than it is today. If that is the view, that has been the underpin view of the oil and gas industry for, forever, right? For 100 years, the view is I'm an oil man because we're drilling today, but it's going to be $100 and we're going to make money. Like that is the concept. And you just sell into a commodity market and like, it is what it is. Power, at least in this country, has been historically this convoluted thing and then gets done on these like long-term arrangements where you sort of cap your upside to a sort of utility style return, and then you have virtually no downside, like is sort of the view. But there is downside occasionally, but like that's the view.
Yeah.
here, like, is there not room to effectively be like, you know what, just forget about all these people and whether or not I can make the timing work with this individual party at this individual location. I just want to build power wherever I can and put it into the grid wherever I can and just ride the upside. And I think that asset class has to be financeable by a large scale institutional investor that says, we have a view that power is probably going to be more expensive 5-10 years from now than it is today. There's not a good way to really play that asset class. Like, we can't really invest in funds that have that thesis because they're doing, PPA contracts or whatever they are. Like, we just want to be long power.
You're talking about like merchant development.
100%. Yeah.
So I'll tell you this, Raj, like from my conversations with people, they don't care how much apparent demand there is. They want contracts. They want deals. They're not willing to take the risk to get into the market as a merchant gas plant provider. Like, not happening. I don't see it. I don't see that capital formation happening anywhere. You could see some situations where specific utilities go and they've got like access to the Texas Energy Fund or something, and they're going to build a gas plant. Okay.
Yeah.
But outside of that, if you're talking like a Vistra or Calpine, they're not leaning into gas. I mean, you might find a situation where they say, hey, we're going to tear down this old gas plant. We're going to build you a brand new one, but it's going to be for a user on a 20-year contract, right?
Yeah.
So it'll be like behind the meter. They're doing a power purchase agreement. It's going to be financed by the user. It isn't going to be speculative. It's not going to be a merchant model. I'm just not seeing that capital formation.
I think it should just be an extension of the nat gas producers or the midstream companies, right? So which is
companies might get involved, right?
Like, we're already in the business of selling gas.
Yeah.
We're already in the business of hedging out some of it. Why not just say, okay, great. If whatever percentage we're willing to let ride on nat gas, we might as well just get in the power business because at least we can take advantage of the spark spread. And if we're wrong and it doesn't kill us because we're already like generating our return. And if we're right, there's going to be 50 guys wanting to buy our project from us. And if we did it once, we'll know how to do it, a couple more times, right?
You might see some of the bigger, more creative midstream guys like Williams and Energy Transfer get into that business. It's possible, and I'm sure they're looking at it, right? But the ones that have been the most aggressive, the ones that are getting the most power requests and requests for natural gas, they're seeing the requests. The question is, how many people are signing contracts?
No.
Right.
And that's where I think the waste of time is coming in, which is, okay, we're going to go get the request. We're going to waste time with these 30 parties. It's like, dude, these 30 parties, if one of them is interested, like one of the 30 is actually ultimately interested, let's just build the power plant. Like, let's just go ahead and go to the next step here. And then we hold all the cards. And then the one real guy will show up and overpay. Right.
I just, this is what creates the opportunity in these sort of markets, and we see the same thing in real estate, right?
Yeah.
If it were 18 or 24 months ago, and I'm a co-location developer,
right?
I'm not going to name one, but I'm a private equity funded colo developer.
Yep.
I could have gone out in the market and secured all the best sites.
Yeah.
But I didn't because I'm a weenie, right? That's kind of the opportunity was there. They could have done it, but they didn't. They don't want to pay like a modest amount of money to secure land or to secure their place and do studies. They would prefer to wait until they're now out of position. And so as a result, there's this big backlog of people that are, you could call it speculation, but it's investing just like anything else. And people are taking risk, right? But those folks that need the power they're eventually going to find their way into a position of needing these big sites, right?
100%, yeah.
And I think that there's a lot of duration to this strategy too, because I'm bullish on AI, but I also think that it's not just AI. There's cloud computing, and there's reshoring, and there's industrial.
Yeah, there's 50 different use cases, right?
There's a bunch of stuff coming back to Texas, and I'm obviously like we're only focused in Texas, right? And
Yeah.
that's like my aperture is like it's narrow, right? So I really don't pay attention much to what's going on in the rest of the country. I don't have much time for that. I just have to kind of focus on what we're working on here. But I am bullish on the asset class. I think the land piece of it is going to be a whipsaw, right? There's going to be all kinds of crazy movement. You're going to see market impacts from what's gone on recently with the tariffs, um, and but at some point, those capital is all going to flow to the right places, and you hope that you're in those places.
Maybe I'll flow to the wrong places and interest rates will be low.
It could.
That's
Yeah,
kind of
well,
the home
I
run
don't know.
scenario.
It's yeah, but it's certainly fascinating, and I've been spending a lot of time on it lately. So
Okay. I know we're probably, getting close to time. You've been really active on LinkedIn and Twitter, I feel like, and you've got a bunch of hot takes. You want to run through a couple of them?
well, I don't know about hot takes, but on LinkedIn, I've obviously been a little bit more active. You know, Previously I really didn't post much on there, and I
It
decided
feels cringe to post something on that platform. And I say
it
this as
does.
someone who has to do
Yeah,
that. And
yeah.
I feel gross every time I do.
Well, look, I don't, if I were posting like sort of congratulatory drivel on LinkedIn, I would expect people to make fun of me. But when I'm on there, and look, I'll post my actual honest thoughts. I'll put what I think out there, and people can either like it or not. It doesn't really matter to me. But um, the interesting thing about LinkedIn is on the surface, it all looks kind of fake.
Yeah,
But when you post your real thoughts and your actual analysis and your on the ground knowledge, you get people that will reach out to you
sure.
that actually know what they're talking about. Now, they might not comment on your posts.
No,
They might not
almost
like
certainly
you,
not.
follow you, or whatever, but they'll come look at your profile. The real estate development manager for every of the big hyperscale companies will look at my profile. Like it doesn't, you know, they're interested in what I'm saying. They want to understand what's
Yeah.
happening on the ground, and I'm a source for that, right? So, am I the best source? I don't know, right? But
But you're
I'm
a source and you're a source willing to comment, right? Which is
right, which
probably
nobody
the
can
more
be, right?
important one.
So everybody else is like keeping their cards close to the vest, which is fine, and I understand that. But I also think like just putting thoughts out there and letting people kind of react to it is useful. It's actually very
You don't have
similar.
to tell me.
Yeah, well, like if you go back like 5 years, Raj, I was doing this on Twitter for the real estate development
Yep. Yep.
for floating RV storage. Now I'm doing it on LinkedIn for data centers.
Right.
And the reason is like the same reason I was doing this on Twitter is when you put ideas out there, you get feedback, you learn, and you iterate. And I don't think that a lot of people they think, well, what if my thought is wrong, or what if my post is wrong, or what if I say something wrong? That doesn't really matter. What matters is that you're putting your thoughts out there and you're learning, right? You're like getting better, reacting to the market, and maybe an opportunity comes out of that, right? Like maybe you find a partner, maybe you find an investor, maybe you
Right.
find a data center owner that wants your sites or whatever, right? There's a dozen ways that could work out well for you, and I think more people need to like avail themselves to that. Like it's not a when you mentioned like surface area of luck. Well, guess what? If you're not out there, you can't
That's
get
right.
lucky, right? You're not putting your thoughts out there. Nobody knows what you think. They don't know how
Also,
you.
no one really cares, right? Like, I think people get like really so. Okay, there's two big thoughts here. One is, in the energy industry, most people, even most very important people, are not really allowed to share certain thoughts, and I understand why. And that's certainly the case in like most of the asset management and finance communities as well, right? Like it is a frowned upon activity. If you're allowed to do it, it's frowned upon. And then, most people are just like are not allowed to do it. So that's like sort of remove that bucket. I don't like, you know, I'm not sure you can
If we were
change
in
that anytime soon,
finance,
but
we would not be able to do this if we were in banking, right? We
that's
would be.
right. Like 100% not, right? Like,
It's funny because I joked with somebody the other day. I was like, I judge how good these posts are based on how many people text them to me. the
That's
sleep
right.
text to me. And it's like, well, I guess that's also like how controversial the post was. And I'm not,
100%. Yeah.
not really trying to be controversial, but like if I put something out there, then hey, it's my thought, and if somebody doesn't like it, fine. Like put your own thought out there and like put a better one. I don't care.
You kind of need in order for someone to really like something, there probably has to be an equal and opposite reaction to that too,
Yeah.
right? And so if no one really loves it, then that also probably means no one's going to hate it, which means like it's all sort of like in the middle of
What,
like
what were you doing with your time after you posted? Like, I posted this thing. You put it out there. It's like, okay, I got no reaction, good or bad. Am I happy with that? Or like, why did I spend the time to write it? Like,
yeah,
why did I take a press release, feed it into Chat GPT, and post that shit on LinkedIn?
yep.
Why did I do that? Who cared? Nobody cared. They
No,
knew that
we have
ChatGPT wrote it.
like
So
we have a whole automation chain for that for every article that we put into our stuff. Now, am I going to go and do that all day every day? Like that's a waste of time. Now, can our account do that with every press release because
sure.
people want some summarized bullet? It's like, oh yeah, perfect. But yeah,
And
it's like,
there's a place for it, but I don't think that it's going to create any thought leadership. It's not going to
no.
share your opinion. And like I think I put this out on LinkedIn the other day. I was like, look, I'm going to come at you guys with some base takes. Not going to fuck around. I'm going to tell you
Yeah.
exactly how I feel, right? Um, if you don't like that, that's okay. No big deal. No harm, no foul. You don't have to follow. You don't have to look. You don't have to research anything. But I'm going to tell you guys what I'm seeing on the ground, real time, and people seem to like that. And if again, I just think like if I'm going to spend time on it, I'm going to be out there doing it. Let's be real about it, right? Like let's just tell people what we're actually seeing and tell them our actual thoughts, and not just kind of sugarcoat it or try to play to the masses with AI generated content or whatever. It's like people can read through that, right?
Everyone can. Like,
Yeah.
at its very core, we have an infinite amount of content generation.
Mm-hmm.
Whether that's digital or whether that's just a
It's about to
conversation.
explode, right? That's really going to
It's
explode.
about to explode. And
Yeah.
so, and human beings for thousands of years have been very good at just telling when the other person is full of it, right? Like at its very core, we are so good at being like, that person's shady. That didn't sound right. And like, yeah, maybe you're off occasionally, but for the most part, you're not. Like your accuracy level in terms of judging whether or not someone is full of it is incredibly high. And that is why, the objective function should be as authentic and as real as you can. The problem is the system that has been generated is so much out of scarcity and fear where you are not allowed to be authentic because you're going to piss some people off. And pissing
People,
the wrong person off may have an outsized amount of value. And for us, I think we have made a conscious decision. This is okay, yeah, like we're probably going to piss some people off, but that is probably the cost of finding the people who really love what we're doing.
yeah, it
And
tends to be.
finding those people pays for all of this stuff in spades, right?
I
Like
think that's right. It's like signal to noise, right?
100%.
There is signal out there. You have to put enough things out into the ether to get it to come back to you.
That's
So
right.
it's not the most natural thing for me. I'm not a super public person. I don't really want to be out there talking at conferences or doing whatever, but like putting thoughts out there on social media, you know, it works out okay.
Well, I think it helps a lot. I know you've got to run. What is the best way for someone to get in touch with you? And maybe we do. Yeah, you could do like a mild plug on what. Yeah, I don't even know if we
The
got too much into it.
best way to get in touch with me is going to be my email. It's just Andrew at Schaper, SCHAPERINTL.com. And that's my day-to-day email for my engineering consulting business. And I
Perfect.
would love to hear from you guys if y'all have comments, feedback, or thoughts. You can also just DM me on LinkedIn too. That works just as well. And I'd love to hear from everybody out there.
And if you're a giant hyperscaler and you want to work on a large project, please email me first
Yeah.
And then I will contact Schaper, so that way
Yeah.
I can get a little deal fee out of this whole
Oh,
arrangement.
sounds like
That's the
good idea.
critical part of the deal fee is critical for me.
Yeah.
Well, awesome, Schaper. I'm glad we were able to do this. This is a long time coming.
Thank you for having me, Raj. It's been a pleasure, and I really enjoy this podcast and all your content. So keep it coming.
Well, I'm glad someone was reading. I love it. I appreciate it, Schaper. I'll catch you soon.
Take
Take
it easy.
care.